Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, December the 12th, 2012. Looking at the U.S. markets today, got a lot of questions to answer, so let's get to it. Starting off with the Dow Jones Industrial Average, the main thing is the overall U.S. markets, we saw a massive move to the upside and then a sell-off after the news came out by the Fed. They did what we expected to do as far as no change in any strategy there, except for they were very clear on the fact that they're going to do QE4. So that's bullish. There's nothing wrong with that. Yet we pulled back after the close. Why did that happen? Well, there's a couple different ways to look at it, but they all basically tell me the exact same thing. The main thing to look at from technical perspective is this high point here is obviously higher than the previous, so you have an overall break of the downtrend, which we've marked on all the charts. And then again, I want to point out that today's high point is higher than yesterday's high, today's low is higher than yesterday's high. We've been seeing a lot of these shooting star signals show up on a lot of different charts, especially in Europe, and they've been absolutely worthless. All they do is just keep moving to the upside. There's a reason for that. The main thing to think about right now is if you are in a trade that has profits on the table and you are not willing to sit through some massive potential pullbacks, then you need to just exit, because there's no way to tell you that don't worry, it's going to be smooth sailing all the way through the fiscal cliff. That's not a smart call. In fact, nobody can tell you whether they're going to solve it or not and before the deadline, and therefore it's important that you know that going into it. You could possibly see massive moves in the market. Now, let's play a couple scenarios out. Let's say that we go over fiscal cliff. What could happen to this chart? This chart, if we go over fiscal cliff, could easily come down here and take out the previous low. What would that do to my strategy? Nothing. I would still be looking for a buy opportunity. The reason for that would be that we have this high point, and then let's say that we're to rally a little more or even start selling off now. We have this high point and this high point here. These are higher highs, so we have the higher high scenario. If we take out this low, then we have lower lows. Well, if I have a scenario where I have actually a chart giving conflicting signals where we have higher highs and lower lows, all that tells me is sideways moving activity. So I'd still be looking for a great buy opportunity at some bottom somewhere, trying to call a bottom somewhere. So that's important to think about. And on top of that, the main reason why I'd be looking for that is because if you look at the actual Fed statements regarding the fiscal cliff, you know that the government cannot just say, well, let's go over fiscal cliff and just forget about it. They can't do that. One way or the other, you're going to get a deal. So eventually, the deal comes through regardless, and the market rebounds massively. More important than that is I don't want you to miss what's coming after the fiscal cliff. Right now, the Fed has come out and said, all right, this is your QE4 that you wanted, you got it. Now everyone's shifted their focus to the fiscal cliff. But there's something after the fiscal cliff. That's the fourth quarter earnings is going to be due out. And those are the best earnings for the year. Everyone expects them to be massive. So, again, I would not want to miss that. So eventually, if you do get a nice quality pullback, be looking for an entry opportunity into that. If you're still staying long, fine, you can do that too. The main thing is advance your stops to lock in some gains. If you don't want it too tight, pull it back and do it more on a strategy of the breakout bullish uptrend. You've made this move here, you consolidated a bit here, now you've broken out to the upside, then set your stop off of the previous low, and she continues to pull back. That's fine, because you could find support at previous resistance and then take off again to the upside. If your stop is too tight, you'll get stopped out and you'll miss that opportunity. Again, if you are in any way, shape, or form not willing to deal with the volatility, just get out of the market. The NASDAQ is painting the same basic overall picture. We have a breakout of the downtrend, so that means that I have higher highs. It means my next pullback, I'm going to be looking for buy opportunities. Even though we have broken out of this to the upside here, a pullback to test that previous resistance line to see if we're finding support there is quite logical. Nothing wrong with that. That's why the stop has not been advanced here. You'll notice that the stop is way up here. Or way down here, I should say. Basically, you break that out, then you could start to argue, okay, we're rolling over ahead of the fiscal cliff, and somebody may want to exit that. That's fine. But you're going to have to, each one of you, decide how you want to trade. And again, I want you to think about the longer term picture. Whenever I look at the individual items and I say, well, how's the market going to behave ahead of the Fed, or how's the market going to behave ahead of the fiscal cliff, or any of those items, there's too many variables there. But I go to the end of it and say, all right, what's going to happen ultimately? Well, ultimately, the Fed's going to, be accommodating to the markets, and ultimately, we're going to have a deal on the fiscal cliff, and ultimately, we're still going to have the fourth quarter earnings when we expect them to be the best earnings of the year. So, all those things in line, I say that pullbacks are great buy opportunities. Quick little announcement right quick. I went to the website just a moment ago and noticed the bandwidth limit has exceeded, so I got the webmaster working on that. Basically that means you guys have been referring your friends and sharing our videos online, and we've grown to a point that we need to expand, so that's cool. Thank you very much. Quick glance here at the Russell 2000 Small Cap Index. Same overall story. You've broken the downtrend. I'm paying attention to this high point here. It's very important. It means the next pullback will be a great buying opportunity, and it's a good argument to say that you should get a nice pullback. And the reason for that being the ultimate oscillator. You get the high point here, corresponding with this high point, and then this current high point here, corresponding with this high point. This is telling you that momentum to the upside is decreasing while price is actually overshooting to the upside. Now they can shake those off, and so there's not a reason to just sell a market. You have to wait for it to roll over and start breaking down before you turn in that particular direction. In this particular case, on this particular chart, I would not attempt to short it, simply because there is no sell signal here. You don't have a shooting star or anything of that nature. Looking at the S&P 500 Large Cap Index, this is the last one we were watching in the U.S. markets to see if whether or not we would actually break out of the high. We have done that today. There's nothing wrong with this chart in any way, shape, or form. We closed slightly to the upside. However, we have had 1, 2, 3, 4, 5, 6 consecutive days to the upside. That's above average, so to find a down day down the road wouldn't surprise me in any way, shape, or form. On top of that, you have the same condition that we've pointed out on the other chart, the Russell. You can see the high point here and the corresponding high point here. We're showing a downtrend at the same time period. We're seeing an uptrend in the price activity. This would also indicate a pullback is due. But again, that pullback would be a great buying opportunity. You know that the fiscal cliff will get worked out. You know that fourth quarter earnings are coming. Go back and look at last year and see the massive sell-off that you had and just before fourth quarter earnings, and see how long that lasted and where we went thereafter. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free. It's obviously back online, so thank you, our webmaster, for that. And thank you guys for sharing this website with your friends and sharing it online. I appreciate that. It means the world to us. That actually keeps us going, so thank you very much for that. One more thing, and kind of humorous. I watched a video, I think it was yesterday. Somebody was showing their website and talking about how they have this 37 videos, technical analysis videos that you can buy. They're half price right now for Christmas. And I thought, you know, it'd be funny if I just went over here and said, hey, guess what? We have hundreds of technical analysis video tutorials right here, and they're 100% free year-round, so Merry Christmas. Also had a question on the email. Wish he'd stop talking to me. Had a question on email regarding the invest section of the portfolio. I had updated this section here under the value alerts. I want to know if we had anything new. I actually do. I have one coming out this weekend. If you you won't see it until this weekend. That's when I update that. But you can look at Goldman Sachs if you're interested in something. Last but not least, at the bottom of the homepage, you will find my personal charts covering the global markets, including the 3-month daily charts as well as the 2-year weekly charts. I will be updating several of these charts with your stop loss limits to lock in some gains, including gold and silver and so forth and so on. So be sure to check those out tonight. God bless, take care, and I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.